Okay, trading terms. Now, as we go through this course, there will be some words that I say that if you don't watch this video, you're not going to understand what I'm talking about. So, this is to go into that. Now, I've prepared most of the words are used in all markets. There are some specific Forex ones, some that came from cryptocurrency and are cryptocurrency specific as well. I don't trade really the stock market, so the patterns I teach you can take to the stock market, but I don't have very much uh, information about stocks, including terms. So anyway, let's go right into it. So first we have bearish or bullish. This is in every market. Bullish is when the price is going up, and bearish is when the price is going down. So it's market sentiment. And um, I'm not really sure where these terms came from. I imagine bears hibernate and the price is hibernating or something. And bulls, when you make them mad, they see red, they go a little crazy. So bullish and bearish. Next, we have short and long. So long is just another word for buy, and short is just another word for sell. So pretty simple. If you think something's going to go up, you're going to long it or buy it. And if you think it's going down, you're going to sell it or short it. Next, we have currency pair. So especially in Forex, these are just the different pairs that there are of currencies. Now there are 180 recognized currencies in circulation being used in 195 different countries. So Euro USD, here I have a little example of what the call sign looks like in TradingView. So this would mean that if you were to buy Euro USD, you're buying the euro and you're anticipating US dollar to go down and the euro to go up. So it's this adverse thing. You expect the US dollar to go up and the euro to go down if you were to sell this or short it. Okay, so moving on, PIP. A PIP is an acronym for percentage in point or price interest point. I'm gonna go over this one more time in another video, so just understand what it means by watching both videos. But PIP is the smallest price move that an exchange rate can make based on Forex market convention. So right here I have the location of the PIP pointed out. Luckily in TradingView and MetaTrader, most of the places that we use to trade or the platforms we use to trade, they'll make the tenth of a pip really small so you can easily find where the pip location is. So as you can see, with different currencies, different inflation rates and things, the decimal point will be in different spots. So just know that the first number that's regular sized is the pip location. So that would mean that this is 4 pips, this is 84 pips, 184 pips. So pretty easy. That's how we calculate our goals, our targets, things like that. Okay, lot size. So in Forex trading specifically, they use the word lot size. That's just the size of the position you're going to open. So a one standard lot is 100,000 units of the currency, whichever currency pair you use. So if you have a one lot open and it moves up 1 pip, you're going to make $10. 10 pips, $100. So adversely, if it goes down 1 pip, you'll lose 10. And a micro lot in Forex trading is the equivalent of 1,000 units. So most brokers and platforms, that's the smallest size you can use. So basically, it's instead of 1, it's 0.01. And that means that 1 pip is worth $1. Okay, moving on. So margin or leverage, these are the same words. A leverage is borrowed money, or margin trading is borrowed money from within a trading account. Trading with leverage allows a trader to open a position with a high contract size but less money. So it's basically you're borrowing money to trade with a larger lot size. So based on a contract of 100,000 per lot, if you were to use leverage, if you were to not use leverage, you would need about $130,000 to trade. So if you find a broker, which the broker I use allows for up to 500x leverage, you can open that same lot size with just $260. So yeah, pretty cool. There's a lot of potential there. Now, just because there's more potential for profit means you're equally as likely to lose more. So we're very careful, and as we go through and learn the process, you'll learn a trading plan and risk management, which is super important in trading. Okay, so what's liquidation or margin call? Good to know what this is. So if you're trading on leverage or margin, if your losses reach the same amount as your account value, the broker will close the trade and take all the money left in your account. So you see, this is why it's so important that we use proper risk management and we're not trading with too large of a position size. So since we are calculated traders or ascended traders, this will never happen to us. You don't have to worry about it. Okay, bid price and ask price. So the ask price is the price that a trader will buy a currency pair at, and the bid price is the price a trader is willing to sell the currency pair at. And the difference between the two is what's called spread. I'm going to go over that more in depth in another video, but spread is important to understand when you're planning your trades. So, if you were to, let's say, buy a currency pair, if you were to buy some euros, you would already be down 7 pips if there's a spread. So 7 is actually pretty low. You'll find that you can see with specific pairs like gold, it can get up to 30, 40, 200 even. So, okay, stop loss. So stop loss is very important. This is an order type that executes and closes a position once it reaches a specific preset price that you set. So this can protect against further losses on a position if prices continue in an unfavorable direction. We use stop losses on every single trade. Very true. Stop losses are so important. You got to protect your profit. Okay, so take profit. This is another order type that executes and closes a position once it reaches a specific preset target price. This can secure your profits if you choose to walk away from your trading desk, or if that's your target and you just want to, whether you're staring at the market or not, and if you expect it to go down to that price, it's a way for the price to automatically, or your position to automatically close when it gets to your target. So yes, if I'm walking away, I'll always use a take profit. I've had so many times where I've left a trade open and it hit the level that I thought it was going to hit when I left, and I came back to the chart, and it ended up retracing and going right back the other direction. So I either lost a little bit or I didn't make nearly as much as I could have. Okay, so we've gone through most of the Forex terms. A lot of those terms are still used in crypto as well. But now we have a few other terms I want to go through, crypto slang and terms. If you start to get into crypto Twitter and things, you will definitely see these a lot. So first is hodl or hold. In early Bitcoin forums, someone posted a message and people thought it meant holding on for dear life or hold on for dear life, especially because Bitcoin cryptocurrency is so volatile. So it was an acronym that became a meme, and people still use and say it today. FUD just means fear, uncertainty, and doubt. A lot of people, a lot of big organizations don't like Bitcoin because it really does put banks and institutions out of business if it were to be adopted at a high level. And so fear, uncertainty, and doubt, if people are spreading FUD, they're just saying that, Bitcoin's going to die or crypto's going to die. Sats. So this is basically the Bitcoin version of pips. A lot farther though in the decimal point. It's just the smallest amount of Bitcoin that you can send. So pretty cool as Bitcoin goes up. If we were to ever adopt it as a world currency, it makes it a lot easier to split it up into smaller fractions. Imagine if one Satoshi was equivalent to $1, something like that. Okay. Pumping. So this is actually the last term that I have in this video, or for this video. And pumping just means that the price is going up. So if it's dumping, oppositely, I don't have that in the slide here. If it's dumping, the price is going down. So I like to say pumping a lot, and some people do like pumping. What does that mean? So yeah, pumping, and remember dumping. That's not in that video, but pretty easy. Cool. We'll see you in the next video.